Join us now for a one-on-one interview to talk all things Tesla after the company reported its first quarter earnings results is Ross Gerber. Ross is president and CBO of Gerber Kawasaki Wealth and Investment Management. Ross, welcome to the show. Nice to have you.
Thanks for having me.
So obviously, I think a big topic of conversation today, understandably so, the announcement from Elon Musk with regards to a cheaper EV model sooner than expected, but still on the back of this really big swing and miss in the first quarter. How do you kind of marry the two kind of pieces of news that everyone is digesting from Tesla today?
So, obviously Tesla as a business is changing rapidly now from what it was over the last 5 years to what it will be over the next 5 years. And I think we saw this juxtaposition with their numbers being pretty bad for Tesla because of the fact they're having a lot of trouble basically selling the cars they have. And they've been cutting prices dramatically to try to increase demand, but not using things like advertising, which is very common to increase demand. On the same respect, they're announcing that they're speeding up the development of the next gen vehicle platform. But I really looked at it as not necessarily a positive because they were really going to build those platforms in new factories and continue to expand rapidly. And what they're really saying is we're going to utilize the factories we have. We just really can't meet the demand. We have too much supply. We don't have enough demand. So we're just going to use the factories we have to build this platform. And they sort of gave a time frame of a year, which we always tack on, 2 to 4 years to whatever time frame Tesla talks about. So that's really our biggest issue. Not that we don't like the idea of them accelerating, a lower cost vehicle, but the chance of them actually doing that in a rapid period of time after cutting, their team by 15%, as well as almost every top executive that we are close with has now left the company. So I think there's a lot that will have to be proven in this story still, while Tesla is going to have some difficult times over the next couple of years.
So you add on an additional time frame of 2 to 4 years. Should investors be adding on that comparable time frame, given Elon Musk's history oftentimes of making promises, giving forecasts that oftentimes don't necessarily come to fruition on the time frame he originally laid out?
Right. And there's a long history of this. So I'm not going to tell people what they should or shouldn't think. I'm an investor who manages billions of dollars. So I have a huge responsibility to my clients. I have a very close relationship with our clients, and we have many, many Tesla shareholders and employees, and unfortunately some ex-employees of Tesla as shareholders. So we know very well what's going on in the company. And one of the reasons I'm interviewed constantly is we actually know probably more about Tesla than anybody on the street. So, these are just difficult times here as Tesla tries to pivot from selling EVs with its CEO who does almost everything possible to not sell EVs to becoming some sort of AI robotics company where we have robot cars and robots walking around our house. And I just see that future. And I'm not going to say that future is not going to happen because obviously I'm a long-term thinker. What I'm saying is that the time frames are not realistic in any way. And that's what investors have to parse out. And then once we get there, what is the economics of a robo-taxi business? Because by my math, it will suck. So I'm not exactly sure that that's a great pivot versus selling a $20,000 or $25,000 car to now renting these cars out on the assumption that all of us are going to start using these, and it would scale in the size of a company like Uber, which is another stock that we own in my fund GK. And so I'm an owner of Uber because I think Uber represents the best opportunity for Tesla to build a robo-taxi and transportation and logistics system. But Uber's already done this. So the idea that Tesla's just going to rapidly do this is really foolish. It took Uber a decade to build their platform and make it profitable. They just turned profitable. So I think that's our biggest issue with the premise is, what are the economics behind this future? And they definitely don't seem as good as the economics of selling, let's say, 10 million cars a year.
Elon Musk in this earnings call called out rival automakers for prioritizing hybrids over true EVs, and therefore, in his argument, kind of diluting the overall conversation, stunting more widespread EV adoption. Do you think that that's a fair allegation for Elon Musk to make, or perhaps is it a little bit of scapegoating? Is he trying to maybe point the finger at some of his rivals to sort of cover up some of his own company's failures?
Well, I think that he's right. We're not a big believer in hybrids as a long-term solution when electrification is so much superior. Electric cars are way superior to hybrid cars in many ways. What it is that hybrid cars are capitalizing off range anxiety. And because Elon and Tesla hasn't taken to educating people about electric vehicles and charging and supercharging network and how awesome it is, people just don't know. So if Toyota goes out and says, oh, hybrids, you won't have to worry about range anxiety, there's no counter messaging being done by the EV community. And that's one of the issues that hybrid sales have increased. People want to be green. They want to invest in a future that's a clean energy future. And a hybrid is not the worst choice here, but it is not the long-term solution. And hybrids are kind of, not great cars typically. And when you look at a Tesla Model Y for $38,000 or $40,000, it is the best deal like ever. So I think hybrids play a role, but it is not the long term. So I don't disagree with it.
Sure. How concerned were you with the actual results for the first 3 months of 2024?
Well, the results suck.
And other announcements. What do you make of the plunging profit year over year?
The results suck. They're the worst numbers I've seen in Tesla in years. And it's mostly around the fact that they've become basically cash flow neutral on operations. And so their car business is not making money while their other businesses are. Services being probably one of the bright spots for Tesla as services has gone up, which is charging and all these other businesses around the car. But the actual car business has deteriorated massively from a very high margin, great business to no margin business, basically. And then with the expenditures on NVIDIA chips, which were big holders of NVIDIA, so I was happy to hear that, but also all the expenditures on Cybertruck launch and all these other things, we had a negative free cash flow of $2.2 billion, and we have not seen this with Tesla in 5 years, where we have a substantial negative cash flow from such a large, growing, profitable company. So this is a concern, and this is really what we're saying as investors, as shareholders, we're entitled to its future profits. And I think a lot of investors don't realize that talking about dreams and talking about taxis and robots is great, but what you own is a stream of Tesla's future profits. And this has become much harder to quantify with this strategy. And that's why we've lowered our position in Tesla. We love the company long-term and the ideas and the future, but there's a reality that they face because Elon is so divisive. He's really hurt the brand, and people pretty much only buy the car because they're a really good deal, not because they want to.
Do you think he has further hurt that brand? Has he dented the brand because the man simply has too much on his plate? In other words, are you in the camp that says, okay, now you got a social media app, you're also launching rockets, you're also putting us on the moon. Oh, and by the way, here's this new cheaper EV for the future. Maybe try and go about being a bit more focused. Are you in that camp the way many investors are?
Obviously, I would love to see Elon work at Tesla full time. And the truth is, I don't think he spends a lot of time at Tesla at all. You said yesterday in the conference call, he spends the majority of his time working at Tesla. And that's just not true if you look at his actual Twitter activity, which is throughout the entire day, 20, 30, 50 tweets a day. And almost none of them have to do with Tesla. So we know where his mindset is. He's fighting for free speech around the world. And he feels that he's this crusader for a cause that, quite frankly, we don't think there's any issue with free speech. We think the issue is that there's too much speech, not too little. That's for sure. So we see him as extremely misguided when he has such a great company that if he focuses on, he can build tremendous value in Tesla, while Twitter has basically gone to crap. The value of Twitter is now down 75 to 80%. The platform has become basically just a bullying platform, and it's dying. So all the things he's done on Twitter aren't working by any metric you want to use. And so he really needs to refocus on Tesla, which is really what's important to the world. It's what's important to climate and solving that and advancing sustainable transportation and energy. So we've had a step back in the entire industry because of this, and he needs to stop making the comments. The focus is one thing, but it's the comments, the constant attacks on immigrants and countries and races and anti-Semitism. It's like, how divisive. It's him, Trump, and Kanye are now in the same breath, and that's just not good for selling cars. It isn't.
Are you of the thinking that, I know you said that you would like him to take on Tesla full time. Realistically, that's likely
he's not going to do that.
Yeah. He's not going to do that. So would you then, is a good plan B for you then to see a different CEO take over Tesla? And if so, who? Is there anyone kind of in the orbit, so to speak, that you've thought could successfully lead this company at this time?
At this point, one must look at Tesla as a privately held company that's run by Elon. The board represents Elon, and you're buying in on him and whatever he wants to do and however he wants to spend the money, the time, or whatever. If you invest in Tesla, you must understand you have no rights as an owner. Okay. Now I go out on TV and I talk about what I think is best for Tesla. And that's sort of the power I have to try to push the company in the right direction. But I can tell you it's pushing against a wall when you're talking to Elon. And so he's fired everybody that I deal with at Tesla. So essentially it's kind of like Shogun at the end, where like everybody gets their head cut off and Toriyama ends up at the top. That's Elon. So he's going to be running this company whether you like it or not. And that's why we've lowered our stake in the company. The way we voted is by selling a lot of our stock because we just think this next stage is going to be a lot more difficult than where we were 5 years ago to where we are today. And so that said, we think long-term investors should consider Tesla as an investment, but one must understand the risks, the time we're in right now, and the challenges that Tesla face are massive moving forward. So, once again, if Elon, I don't bet against people, I just don't, and especially crazy people. And so we tend to bet with crazy people. So we're keeping some investment in Tesla, but I think it was our top investment for the last 5 years, and we've made a fortune off of it, and we've trimmed our position at the right times. And so we're in a great position. Our clients are happy. Our top positions are, Microsoft and NVIDIA in the tech space right now, and think that they're going to lead the future. And after the conference call, I'm more confident than ever that NVIDIA is in the best position of any company in America. Even Tesla, they're going to spend billions and billions more in NVIDIA, along with every other major tech player. So, our job is to make clients money per se, not just fall in love with a company, even though it changes its strategy into a less profitable business. We have to go to where the profits are. And it's clear from Elon where the profits are. It's just NVIDIA. And that's why it's our top position.
I am out of time. I'd love to sneak in one quick one here. Elon Musk's multi-billion-dollar compensation package up for a vote in June. I'm sure there's going to be a wide world, Ross, of legal entanglements that come about as a result of that. Is that in the best interest of the company and the company's shareholders?
No. And that's why I tweeted that I'm voting no for the comp package. And a lot of people think it's like because I don't think he deserves it or this or that. That is not actually what I think at all. Okay, what he deserves or not deserves is he should have done this right the first time. He's certainly smart enough and have enough people around him to have done the comp package right the first time. And they didn't. It's not an independent board. Okay, they lied on the proxy statement. It was an outrageously high upside that he earned. But when you think about it, nobody actually negotiated with him at all. And maybe we could have gotten the same pay package for half the cost, which would have given him $25 billion instead of $50 billion. But it would save shareholders literally tens of billions of dollars, and nobody negotiated on our behalf. So what I really think is Elon deserves a new pay package, and those pay package should require him to do certain things that are required of CEOs and have the same types of benchmarks moving forward. I'm all for him being compensated. I just think that they've done everything wrong with the board. And if they approve this comp package, this is going to be another lawsuit. It just doesn't matter that they posted the government's position as some sort of now you have a better opportunity to assess and vote on this. The bottom line is nobody negotiated against Elon, and they should have come back with another comp package instead of just putting this one up again.
We'll have to leave it there. Thank you for the time, the context, and the perspective the day after earnings. Ross Gerber, thanks for being here.
Yeah, thanks for having me.